Hey everybody, thanks for joining me. I'm Danny Barker with eXp Realty here in San Diego, California. I also mostly advise VA buyers, so veterans, to use their VA loan to purchase property while they're in the military and after they're out of the military to grow their portfolio and build wealth for them, their future, and their family. Thanks for joining me today. Today's topic is going to be when you combine your efforts with your fiance, girlfriend, boyfriend, or your marriage, your spouse, right? When one person's a veteran and the other one's not, we're going to go through a few different scenarios. The first scenario that we're going to go through is just the plain old, hey, I'm a veteran, I'm a single man, and I'm going to go out and purchase a property for the first time. In this approach, there is no limit put forth by the VA saying, hey, you can't go out and buy a property more than 832,000 and some change in most markets. And here in San Diego, it's well over $1 million. But that limit only comes into play when you already have a VA loan on a property and you're looking to buy your next primary residence with another VA loan, and you're going to keep that VA loan behind. So first things first, when one veteran is buying a property, they take a look at your entitlement. So if you do have a VA loan in place somewhere else, let's say that you have a $300,000 mortgage in North Carolina, and now you've moved to San Diego, California. So now they're going to take the VA loan limit for San Diego, California, and they're going to subtract that $300,000 from your entitlement, and they're going to say that you have this $700,000 or $800,000 to go out and purchase with zero down. Does that mean that you can't buy property for more? Let's call it $700,000. That's not the case. What is the case is if you do go over that $700,000 mark, what the VA wants to do is have you pay 25% as a down payment for the amount that you go over your zero down entitlement. So when you're looking at your VA entitlement, I want you to picture it as that's your zero down entitlement. Anything above that zero down entitlement is going to require a 25% down payment. So in the scenario that we just talked about, you have $700,000 left in entitlement. You're buying a house for $800,000. That's $100,000 over your limit. 25% of that $100,000 is $25,000. It's as simple as that. If you buy one for $750,000, then your down payment would be 25% of that $50,000, which would be the $12,500. Now, the second limit, let's get into this. Legally married couple, one veteran and one non-veteran. So I think the first scenario we should cover is not married. So one veteran, one non-veteran, not married. What we would do is we would say, okay, you're buying a property here in San Diego, California, and you're going to partner up with somebody who's not a veteran. So you take the purchase price and you divide it in half. Half of that purchase price is the responsibility of the veteran. The other half is the responsibility of the non-veteran. So now that non-veteran has to put 25% down of their half, right? So if you're going to buy an $800,000 property with a non-veteran, they're going to use up $400,000 of your zero down entitlement. So your $400,000 is going to be zero down. The other $400,000 is going to be assigned to the non-veteran, which in most cases, this is like a parent or something. So of that $400,000, they have to put 25% down because they have zero eligibility for zero down. So that'd be $100,000 down. A lot of people turn that into quick math and say it's 12.5% down of the total purchase. So the next scenario is legally married, one veteran, one non-veteran, right? Your entire entitlement and all of your incomes and all of your debts are associated with the veteran's benefits. So even though your spouse is not a veteran, they still get to play in the zero down entitlement that you have for yourself in your own entitlement. So in that $800,000 property, if you only have $700,000 left in entitlement and you're buying a property for $800,000, then you're going to pay 25% of the $100,000 over $700,000. I hope that you're keeping up with all of this. Now, let's talk about two legally married veterans. Does that change how this goes? So yes, and could be no. So if one of the veterans' entitlement is completely used up and they have zero entitlement left, then the other veteran is not used their entitlement at all, then you have an unlimited amount of zero down entitlement for that first purchase for the veteran spouse that has not used any of their entitlement. So let's go back to our scenario where one veteran has $700,000 left and the other veteran has an infinite amount left, right? So now they can buy using just the unused entitlement over 1.4 million with zero down. But if you're going to split the entitlement, then we're going to look at both of the entitlements. So spouse number one has $700,000 left in entitlement. Spouse number two, let's call it $600,000 left in entitlement. What does this mean? This means if you split the not just ownership, but if you split the entitlement, where we're using half of the entitlement for there and half the entitlement for there, and we're buying something at 1.4 million. Now we're using 700,000 and 700,000. So we're $100,000 over one of the spouse's VA entitlement, which could result in a $25,000 down payment. Now, if you roll that back and say, hey, how about we use the unrestricted person's entitlement and just the unrestricted person's entitlement, you can buy that same $1.4 million property with zero down. But if you both have something going on somewhere else, if you both have ownership and your entitlement is tied up into a loan somewhere else, then you have to start divvying out how it is. And when two people are buying a property using a VA loan, it's always the responsibility of the loan is always split 50-50, even if the ownership is spelled out to be something different. Now let's see, the two people that are not married, one veteran and one non-veteran, we already kind of went through that. The same thing, you just split it half and half. Now let's go back to the two veterans that are married. When you have two veterans that are married, like my mother and father, they each have their own certificate of eligibility. I think my parents only ever used my father's certificate of eligibility, so my mother's has been untouched this whole time. So right now my dad has passed away, and my mom still has her full entitlement, but she is still paying off the VA loan of the property that she is in currently, right? And that's my dad's entitlement. So she can go out and buy whatever her entitlement would allow, right? Whatever her qualifications would allow. And now where does the qualifications come into play? That's lender by lender. It's really not up to the VA. The VA doesn't give a minimum credit score, and they don't publicize where they're okay with the debt to income ratios. It's very much case by case. It's location, it's your credit score, it's your debt to income, it's your payment history, it's all of that stuff rolled into one. So you've got to really kind of strategize this from the beginning. It's best to identify which approach you're going to use and which approach you're going to move forward to before you go shopping. That way we know exactly how it's going to go in escrow. And there's also opportunity to get your letters of explanation written out and delivered to the underwriter before we even go shopping. We have had quite a few transactions these days where the underwriter is kicking the file back saying, hey, please explain this time that you weren't paying rent. I don't see you paying rent during your time while you're on deployment. Why is that happening? Other stuff is, hey, we see that every first of the month you're sending $1,000 to this thing, but that $1,000 isn't on your credit report. Can you please explain what that $1,000 is and if it will continue to be a $1,000 payment moving forward? And you can put in your letter of explanation what that $1,000 a month goes to, who it goes to, why it was going there, and if it will continue to go there or not. If it is going to continue to go there, then they're just going to put it as part of your debts on your debt to income ratio. The reason that we would always advise doing this ahead of time is because you don't want to get into escrow on something and later find out that you have to put a down payment where you didn't think that you were going to have to put a down payment. I hope this video helps you guys conceptualize the idea of buying property with or without your spouse, or whether you should prioritize getting married first before you go buying a property together. I'm not saying rush into the marriage. I'm saying delay that purchase if it's definitely needed and appropriate. We do have quite a bit of clients that have served their time in service. They've got all of their incomes from their pension and their disability. They might have just started a new job, and their fiance has a very well performing job. So the veteran doesn't have a qualifying income outside of the disability and pension, and that's not enough to get into the type of property that they're looking for. Their fiance does have the income that would put them up above that spending limit. They are going to share the bill anyway, whether they're married or not. In that scenario, you're either going to have to put the down payment because you're not ready to get married yet, or you're going to have to pass on the house and delay your purchase until after you get married. I hope this topic is something that is top of mind for you guys. And I don't mean for this to be, hey, go get married. What I do mean for this to be is so that it's just informational, so that you guys can help conceptualize and talk with your lender about your specific way forward. And if you're looking for a good lender to work with, please give me a call. I've got a whole list of lenders that are well performing throughout the United States, all 50 states, and Puerto Rico and Guam. So don't forget, you can use your VA loan in Puerto Rico and Guam. When it comes to real estate agents, this is my bread and butter, where you can make meetings with me, and I'll coach you on getting ready and getting set for making a purchase in your market. And then I'll put you in touch with a very well-performing realtor in your market. And that way you can make sure that you're working with a well-performing realtor. If you don't work with them, at least I know that you went forward with somebody who is just as good, if not better, than the person that's in my network. I hope this helps. You guys take care, and see you next time.